Curious what earnest money is and why you need it? Stick around as we get into that in the question of the day. What's going on, guys? Matt in the hat. Matt Johnson Real Estate, powered by Keller Williams Diamond Partners. You are tuned in to the Hot List. I come to you on Monday through Friday, each and every week around 12 o'clock Central Standard Time, and we hang out and talk real estate. We talk properties new to the market with recent price reductions or something unique about the property that I want to share with y'all and want y'all to know. I also answer a question of the day that is submitted by a listener of the show. And finally, I recognize and thank a sponsor of the week each and every week. And to find out more information, how you could either be a sponsor and support the show, or if you have a question that you'd like answered and to get on the show, all you got to do is just hang out with me till the end. All right, so as you guys can tell, I am a little early today. I've got some meetings going on starting within about an hour. I wanted to get this video done, and I wanted to do it before my meetings instead of after because I don't know how long they're going to take. So I am a little early. So for those joining, thank you so much for hanging out, tuning in, and keeping up with me. For my YouTubers out there, thank you for stopping by, checking out the channel as well. Make sure that you like, subscribe to the channel, turn on those bell notifications so as I bring new videos and new content, you get notified and can come check them out. All right, so first and foremost, the property that we are talking about today, the address is 1523 West Street. That is right here in Emporia. This house is a 2-story house. It's a 3-bed, 1.5 bath house. It has 1,512 square feet of finished space, currently listed for $149,875, courtesy of Real Estate. So this one is in a northwest central kind of location. I say northwest central because it's kind of in that area. Sounds a little weird, but it's going to be close to a number of different grade schools. You're not too far away from the middle school or the high school, as well as amenities like grocery stores or even the downtown Emporia area. So it's a great location, kind of in the middle between both being in the middle of being close to the downtown area as well as some other amenities as well. It's got original hardwood floors throughout the house. They recently put in a new heating and cooling unit. It's got a covered porch, which looks very cool as you take a picture. Excuse me. As you take a look at the house, not a picture. And of course, with the weather cooling down, it does have a wood fireplace for you to cozy up or just chillax in front of. It does have a basement that is non-finished. Does have a single car detached garage as well as a storage shed out back. So all you got to do is just click on the link in the description. It'll take you right to the house while it is available, so you can check out the pictures and see for yourself. If you are pre-approved, not currently working with an agent, all you got to do, hit me up. I would be happy to schedule an appointment or answer some questions for you about the property. Before I get to the question of the day, I do want to recognize and thank our sponsor of the week this week, and that is Enlivant Senior Living. They have a community here in town. They do have communities nationwide. They have just over 240 communities, and it's throughout the U.S. They do provide assisted living, and they actually also provide personalized care for each resident. I've included a link in the description so you can click it. It'll take you right to their Facebook page so you can see what they offer, kind of what they have. They did a tribute to Veterans Day a couple weeks ago now. Yeah, almost 2 weeks ago now. And then of course they do some fun things like family recipes. They just did a contest for that as well. So make sure you check out that video because that's very cool. Also, the community here in the Emporia area is hiring as well. So make sure that you click on that careers link, and that'll take you to their website that shows what they are hiring for and looking for right now. I know right now they are looking for a med aid, an LPN, and a part-time maintenance person. So if you guys have any interest, qualifications, just click on that careers link. It'll take you right to their website, and you can take a look and see if that's something that interests you or that you are qualified for. Just click it, fill it out, and get it over to the director there. And now, the long-awaited question of the day. The question of the day is submitted by a listener of the show, so please keep those questions coming. I'm not able to do this without your questions that you submit and you ask, so please keep those coming. I greatly appreciate it. Gives me some videos as well as some content to bring to y'all. So the question of the day: why do I need earnest money? And this is one of those things that is not fully understood in the real estate world, because and it's also not fully explained at the same time. Because when you're shopping for a home, it kind of feels like you're throwing money everywhere. Let's be honest. I mean, you've got application fees, you've got inspections, you've got the appraisal, and if your realtor doesn't explain what earnest money is or doesn't prepare you for the amount of earnest money, or what's standard, or even lay out the process when it comes to the time to put in the offer, and they put in and tell you this is the amount that's standard, and which can vary between 1% to 3% depending on where you're at. So if you're not planning on that, and with that offer you're submitting $1,000, $2,000, all of a sudden you're like, whoa, let's pump them brakes a little bit, and why don't you explain this to me, because you didn't explain to me what this was. I'm already looking at paying for all this. What is this? So that's what this video is for. And right now, with the time of low interest rates, low to no down payments, and a thin market inventory, earnest money can be the most important negotiating tool that you have right now. So what we're going to talk about today is going to be 3 things that you need to know about earnest money. So first one is what you need to know about earnest money. So when you're making an offer on a property, on a house, part of the offer can include a sign of good faith, and that's usually recommended as well. Usually this is in the form of earnest money. Earnest money can be, typically they prefer it delivered in the form of a check, money order, so there's proof, and they can make a copy of it. Again, generally it's 1% to 3% of the offer price, which is pretty normal for an earnest money deposit. That's really typical around this area. Now, this can vary by location as well as market conditions. Some areas not only have earnest money, but they also have a due diligence money, which is additional money that can be negotiated. Now, often the more earnest money that you put down, the better you're going to be. But what happens to that money? I mentioned that earnest money is a sign and show of good faith that you are continuing and want to continue moving forward with the transaction, having your offer accepted. So once you're at closing, it actually becomes a part of your cash to close equation. So what that also includes in that is it's going to include other items like your down payment, your closing costs, and other prepaids. Earnest money is not a bribe. It is not an additional fee to convince a seller to sell their home to you. This is simply applied in full as a credit at closing docs if you at closing time if you make it that far, and this reduces the amount of money that you need to bring to closing. Second thing you need to know is when you would get your earnest money back. If you decide to back out of a deal without cause, the seller could keep some or all of the earnest money that you put down. There are circumstances where you would get your earnest money back. For example, unacceptable home inspection. Now, typically this has to be stipulated in the contract. So just an FYI, there's no givens in real estate. So, but there are some things that are pretty standard. So having an unacceptable home inspection, like the seller not willing to make reasonable repairs, can be cause for the buyer to terminate and get their earnest money back. Another example would be if the buyer's financing falls through. Again, this would need to be stated or an addendum put into the contract or added as well. Just covering my bases here. Just follow me. Financing, I think we would all agree, is pretty important when it comes to a real estate transaction, which is why generally it's pretty standard and understood when it comes to these. If your financing falls through due to no fault of your own, for example, I had some buyers earlier this year that got laid off. They no longer qualified for that loan. There's can also be times maybe your bank closes down or your co-borrower dies. Whatever the case may be, these are generally circumstances where you would be able to reclaim your earnest money as well. Specifics should be stated in the contract. Talk to your agent. And another third example would be the seller is unable to close. This is a rare situation, may happen once in a while. I have not been involved or heard of a situation like this. I have talked to other agents that have had this happen, so that's why I'm including it. So, for example, what does that mean seller can't close? The most common one that I've heard talking to other agents, the seller believed they were the owners of the home and turns out they're not. So what happens, this most typically happens when a parent dies without a will. The property is then forced into probate court, and if there was no heir found, maybe there was an only child and they thought they would be the heir. It's, again, I have not been in that situation, thankfully, because that can get confusing when you think that you are the owner of the house. Turns out that there was a only child, what aunt, uncle, whatever the case may be, that had a right or had a claim to that property. They own it, you actually don't. Seller would not be able to close. The buyer would get their earnest money back. Again, not super common, but I just wanted to include it because it has happened on occasion from what I'm told. And finally, number 3 is, what is an earnest money note? So this is not super common anymore. But it still does happen from time to time. As I give you an example, you'll understand why. Some markets have an additional option for earnest money, and this is referred to as an earnest money promissory note. This is essentially an IOU that accompanies the offer, because instead of with an offer accepted here in the state of Kansas, we have five business days to take the earnest money deposit to the title company, and they open the escrow, make a copy of the check, the receipt, and send it to the agents. So this is essentially an IOU that accompanies the offer. The promissory note will state exactly when you're going to turn that paper into cash or forfeit the offer altogether. Once upon a time, in a land far, far away, in a time long ago, this was very common. Now, it's just not as common as it used to be. However, if you live in an area that uses promissory notes, or they are common, I would recommend describing in as much detail as possible why you're not able to provide an earnest money deposit and you're providing the promissory note, and how you will redeem it and when in this situation. The most common example that I've been able to find with a promissory note is for people that have stocks or a 401k. So for example, you want to use your stock for cash for a down payment. You're not wanting to touch that until you're truly ready to pull that trigger and you truly know that this is what you want to do. Then you may need some time to sell the stocks to cover the earnest money deposit. In this case, you're going to specify this as the reason and state when it will be initiated. So I'm going to initiate it on November 25th, whatever the case may be. And then you make sure that you convert that note on that day and start cashing out the stocks. Now, oftentimes these aren't as common as they used to be, because promissory notes usually are a sign of a weaker offer because you're having to wait, as opposed to somebody that is able to take that earnest money deposit to the title company within hours of the offer being accepted. Now, of course, this varies from offer to offer, situation to situation, as well as location. So that is what earnest money is, what it isn't, what it does, what it's for, and some things that you may not have known. So when you're dealing with this, your agent should explain this up front. So they again should explain some of the fees that are going to be associated with looking at buying a house, like an earnest money deposit, the application fees, which your lender would usually explain to you, appraisals and inspections, which again your agent should definitely explain those to you, possibly even your lender, depending on your lender. So that's it. That is what the 3 things that you need to know about earnest money. So thanks for tuning in with Matt in the Hat, Matt Johnson Real Estate, powered by Keller Williams Diamond Partners. I do this because your experience matters and should be trusted with a veteran. Y'all have an awesome day, and I will see you back in here tomorrow.